Actually.
Yep.
All right. We have managed to, I don't know, the like 15th time's the charm, perhaps. Well, welcome back everybody to our Wealth Wednesdays call with Karen Schaefer and Heather Tankersley. And just a quick reminder, because we both come from the investment education background world. So just quick disclaimer that the information that we talk about or the topics that we discuss are our opinion. There's no guarantees of wealth or riches or anything of that nature. Always consult your own legal counsel and professional financial counsel like accountants, CPAs, all that good stuff. So with that, again, I'm Heather Tankersley, and I am here in Austin, Texas. I almost said South Florida because I was there for the last week. Do a lot of real estate investments in South Florida, some here in Texas, and also am licensed as an agent in both Texas and Florida. And Karen?
Yeah. Hi, everybody. I'm Karen Schaefer. I'm here in Southern Colorado with Remax Properties, and my husband and I do quite a bit of real estate investing as far as residential, commercial, flips, holds, vacation rentals, all that stuff. And like Heather said, lots of investing. And we're also, I'm also a licensed real estate agent. So we love hearing about you guys and what you're doing. Heather and I totally love hearing about people's transactions and their deals and their prospects. So make sure that if you have anything going like that, put it in the comments as we talk today, even if it's not specific to the topic, because we love analyzing your deals in those areas.
Absolutely. Great point. So did you have a good, before we dive in, did you have a good Thanksgiving?
I did. My birthday was the day before Thanksgiving this year. So
Oh, it was. And I was a total bonehead and forgot to text you.
Oh, right. I know. No, I'm teasing you. But the nice thing is we just kind of rolled, I worked that day because it was a Wednesday, but that night we stopped and made crab legs and kind of rolled the whole thing into the rest of the long weekend. So it was actually really, really nice and quiet and peaceful, and got some good productive work done, because I love, contrary to what other people do, is sometimes I like to hide on the holidays and actually work on big projects, because then nobody's bothering you.
Yeah, exactly. You
You?
clearly don't have a 3 and a 5-year-old, because
I don't.
we don't do anything fun with our kids ever. And so on Thanksgiving, I did a scavenger hunt. So they had like 15 little clues to go through my mother-in-law's house. And then at the end, there was a, Charlie Brown Thanksgiving book hiding in the bathtub. And then we did turkey hunts with other things, and we did crafts, and, so nothing. And then after all of that, like, Mommy, we still need to play. I'm like, we've played for 5 hours straight. So I guess that's a good thing, though. And we drove to and from Florida from Austin, and the kids do great in the car. So we're thankful. We had tickets. I bought tickets or used points to get our tickets on Southwest. And then I just started thinking, I'm going to be a wreck with them on the airplane. Just don't touch, don't look, don't do this. And they can't keep masks on for 4 hours. I can't. And then I was like, my mother-in-law, 73, we come back to Austin. I'm going to have to keep them home, because I'd feel awful if we brought COVID into the school and 18 families to 36 families are taken out. So anyway, we drove, and it was kind of interesting, because, I know what's going on in the Florida real estate market, but I'm not in it on a day-to-day basis. I'm in Texas, and our market's just bananas. Like, people are just way overpaying. There's, I just did a infographic yesterday, and, just to put things into perspective, last year, our average days on market in November was 56. This year was 30. Last year we had over 32, almost 3,300 active listings in November. And this year we had 1,700. So it's just crazy. And Florida's still a seller's market, but a little bit more balanced. And the reason I bring that up is because today we sort of want to talk about market predictions and looking ahead to the future. And, there's people a lot smarter than I am that study all the charts and graphs and all that stuff all day, every day. And I don't. I'm in the business. I kind of feel what's going on. I read a lot of industry news, talk with people throughout the country like Karen, and I know some folks in California. Obviously, I'm connected well in Florida, throughout Texas, some people in the Northeast. So kind of have a feel for what's going on around the country. And again, different places are going to be different. But there's no shortage of predictions. And the funny thing is if anyone could actually be guaranteed to get predictions right, we'd be in a whole different world. You know, if somebody could have predicted what happened in 2008, 2009, I'd probably have a couple $100,000 extra in the bank still sitting around these days.
Right.
But the thing to really remember is that real estate is market specific, right? We watch the headlines on the news and we see real estate starts, you know, new construction starts and all that. And the thing is, it's local, but it's not even just local, it's hyper local, right? So it's not just Colorado, it's not just Texas, it's, you know, and even within that, it's not just Austin, Texas, it's certain pockets in Austin, certain neighborhoods, certain communities. Like, you know, if a property goes on the market in this neighborhood, I mean, it's just crazy. It's selling regardless, and probably for more than it should, right?
Yeah.
So I think that's an important thing to first make sure people are aware of, that you've really got to dig in locally, especially if you're investing, because you know, there's investors so my first year in real estate, I had a business partner and we literally focused on, I don't know, probably 3 square miles in a little place called Hollywood, Florida. We knew every house in that community. We knew when they went on the market. We knew when they sold. We knew what it looked like inside. And, you know, when you say hyper local, we did 15, 20 deals in that one neighborhood in 1 year. So, you know, I don't know what your thoughts are on that.
Yeah, I think it's a super interesting market right now, and like you're saying, you know, things are. I read an article yesterday, and they were talking about how right here locally, again talking, you know, kind of more locally, so they were specific to Colorado Springs in the article, but they were saying that year to date, somebody can purchase $35,000 more than they could last year at this time, and part of that is because the interest rates are so low and continuing to go low. But what we're seeing is you know, there's still such a shortage of homes.
So they're the home that they could have bought a year ago for 35,000 less, they're just paying 35 grand more. So
right, that's exactly my point. And so what's going to happen here is, and even though Heather and I are both, and we've talked about this often, we're both living in very, very, very hot markets. You know, I'm super grateful that for the majority of my clients, they're not $300,000, $400,000 clients. There's nothing wrong with those at all. I just don't know that I have the bandwidth to manage 25 offers on those houses, and that's the nature of our market right now. You know, it's insane. But what Heather and I are kind of leading up to here is we're creating a little bit of a perfect storm, I think, don't you, Heather, as far as, you know, what's next. So we've got hot markets for the most part throughout the country, truthfully,
Sure.
and some are hotter than others, but all are moving pretty well. We have really low interest rates. We have high demand. We have low inventory. These are all the things. And we have new administration. So,
well, and I want to kind of piggyback on that too, is that, again, where it comes from, because you guys, I know, are getting a lot of people from other states, some of them from Texas, honestly. We're
from
getting
yours,
from
let's
ours.
sit tight for a little while.
We're getting so much from like California and Washington, Seattle area in particular, and Oregon. And then, you know, Florida, they're getting pretty much Northeast exodus down there. So, you know, it's a little bit different depending, because you may be in one of those states and there may not be a massive buyer demands because they're leaving. And to your point, Karen, politics play a role, regardless of who you like or don't like. You know, we know the last market crash, the real estate market crashed in 2008, and everybody says, oh, it was Bush, and it was on Bush's watch 100%. However, the policies that were put in place started, I mean, 15, 16, 18 years beforehand, when they changed. You know, it was just everybody has a right to own a home, no money down, state your income. And then when the Bush administration came in, they didn't do anything to stem that. In fact, it kept growing and growing. And all of a sudden, you know, you could be a school teacher and tell a mortgage broker that you make $750,000 a year. And they say, okay, cool, your credit's good, we believe you. And then all of a sudden you can't afford your home. Now, there are a lot of,
what was the name of that? Just like a disclosed loan?
Just
stated income.
Yeah.
Yeah. Because I remember I bought my first house like that, stated income.
Oh, yeah, no, I bought lots of houses that way, but you know.
Yeah. I mean, my very first home I ever bought, my personal home, they just did stated income. I didn't even know what the heck I was doing. I had not been an investor, none of that yet. And I was just like, well, do you need anything to show, you know, because I was always an independent contractor, and they were like, we're just doing stated income. I'm like, so I could tell you anything and you'll believe me. That
Right.
was basically what it was. It was great. Like
Yeah.
I used to joke about it all the time, Heather. I'd say, if you could fog a mirror, you could get a loan. Like
Pretty
that was the
much. But
whole,
and you had to
yeah.
have credit over like 550 too,
Oh,
And,
well.
and I say 550, guys, that's really low. So,
Mhm.
but and then all of a sudden the market crashed, and there were a lot of other factors at play. And when we talk about the crash of 2008, 2009, I don't know how you felt the effects of that in Colorado. Uh, I feel like there were probably half a dozen states that were sort of ground zero there. Florida being one of them, California, Nevada, Arizona. And
Mhm.
so what happened in those states, Texas was my mostly unaffected by that because they had different rules. So there were loan programs that are not loan programs, but yeah, I guess. So we had they were called pay option or pay option arms. So adjustable rate mortgages got a terrible rap because everybody's like, oh, that's what killed the market. Well, the way these things worked is they would essentially, the choose your own adventure books, they were like choose your own mortgage payment books. And
Right,
so you
right,
could say, oh, okay, I've got a choice. I can pay the 15-year, the 30-year, the interest only, or this minimum payment. Kind of like the
right.
minimum payment on your credit card, only worse. And so what happened is I remember driving up and down I-95 and saying, no money down, no payments for 2 months, get a $200,000 house for $600 a month. And so people were like, hot damn, I'm getting a house I can buy on the first. I don't have a payment due now for 2 months. I get to live rent free. And in some cases, I could even get money back at closing. So literally
Mhm.
everybody went to do this. The problem is most people that got those loans, they're great for an investor when you're going to be in and out inside of a year. But most people got those loans had some subprime credit. And so their mortgage rates were actually at 8 or 9%. Their minimum
Mhm.
payment were like 2% interest. And the little sneaky thing in these contracts that nobody ever reads their mortgages, right? Said, well, once you reach 110%, and that was, I mean, there were different programs of your original balance, we're going to recast it. And now all of a sudden you owe your 30-year payment. So in other words, if you had a $200,000 home and you're paying the minimum payment every month, you're adding, 400 or $500 a month to the principal. All of a sudden that principal balance goes from 200 up to 220,000. They recast it and say, oh, guess what? Your payment's now 1,500. And by the way, since you bought it from somebody that owned it for 100 million years, and homestead was capped in Florida, you your taxes also are going up by about 5,000 a year, so you've got a shortfall. So now all of a sudden these people had crazy payments that they couldn't sustain, they couldn't afford. So I say that because that's what happened back then, because everyone's like, oh, we're headed for a crash like that. We're not headed for a crash like that because the market dynamics are different than they were back then. But there are some other things that are happening that are going to cause some correction, adjustment, changes, what have you, and kind of make it actually a little easier for investors. And even if you watch the markets, you say, gosh, it's record high, record high, record high. And many of the experts are predicting a correction of 20 to 30% down on the stock market. So I just say that because as we talk about predictions and things that are likely or possible to happen in the next month to the next year, understand that we're not talking about, you can't go back and look at 2008 and 9 and say, oh, okay, we're just copying that. So,
Mhm. Right. Well, it's kind of an interesting thing because a lot of people they keep talking about the bubble, the bubble. I'm like, there is no bubble this time. It's not, there's no bubble. So everybody can just, feel good about that pretty much. But I do think that, like you're saying, Heather, is what we are going to see some of the similar things happen where we will see some foreclosures. Because people have been, this is kind of interesting and just put me back on track if I get off track here, but, you guys, there's some things out there, foreclosures, forbearance, all those things that are still happening right now. And what's going on is that because some people were maybe laid off or furloughed or something during COVID, they actually were allowed to do forbearance with the bank, meaning they can push all their payments to the end. And so many people did that. A lot of people did it that did not need to do it. So there'll be some special surprises for all of you. But And so what's happened though is then, or people have just gotten behind. They didn't bother to do that and they couldn't make payments, or they didn't want to make payments or something like that. And so what we're going to see soon is that we will see these opportunities that Heather's alluding to coming on the market for investors. And those are foreclosures,
Oh, well, and
basically. Or
Karen, let me point out. So just to keep math simple and, different markets, different things. So let's just say your payments are 2,500 bucks a month. And
right.
and there's some extra interest, but I'm going to keep the math simple. So over the course of a year, you could pretty easily have got, originally it was 3 months and 6 months, and then you could extend it for up to a year, depending on certain programs. I believe they were just Fannie Mae and Freddie Mac, but don't
Yeah,
quote.
and so Heather's talking about forbearance, you guys know, right, Heather? And
Right.
then, so that means you're not making your payment. So just so we're clear about that, I kind of said it earlier, but you're not making your payment, but it's adding on to the end. So you're
So in
basically
this case,
extending your.
right. So at 2,500 a month, you're at the end of the year, and there's extra interest. So it's going to be more than this, but for simple math, if you've done the forbearance for a year, you've now tacked on $30,000 to your loan. So let's say you owed, 250 on it. Now you owe 280. If you need to suddenly move, you may or may not, depending on your market, have the equity there, depending on when you bought the house, depending on all these factors. So now you may be upside down, even though you technically haven't been late on payments, you technically haven't done anything quote unquote wrong, but that $30,000 that you didn't pay is now tacked on the back. And when you go to sell it, the bank still wants their money.
Yeah. Yeah. It's kind of interesting because people think, oh, this is like a free year. We're seeing that with rentals, which is a whole other topic. And maybe we'll talk about that next week, where, they didn't have to make their rent payments. You didn't have to make your home mortgage payment, etc. Well, guess what, guys? There's nothing for free. And so that's really what we're
I still
talking
want to
about.
chime in, but I'll behave.
I know, right? That's a whole other topic, but
Yeah,
that one we
yeah.
need wine. Um, and I was like, it's too early for wine.
Baileys and
But
coffee.
the thing that we really want to focus on, though, is the fact that there's so people have done that, and hopefully they can all get back on track. And that's really, would be the ideal situation, but it's not the reality. And so some people will decide, number one, I can't get back on track, so I can't stay here. Some landlords will go into foreclosure because the tenants didn't have to pay rent. Well, the landlord still has a mortgage to pay. So that's a whole other, we'll add that to our wine topic, right, Heather?
Right.
Um,
And again,
but
the same thing with the eviction, the rent. It wasn't like you get free rent. You're going to owe this back rent. And same for if you had a commercial space. Now, how many tenants, let's say they're paying 1,500 bucks a month at the end of 6 months, how many tenants are going to be like, oh yeah, here's your $9,000? Like
right,
none.
right. I've been saving. No, that's not what's happened. So what's happening, or what we will see coming, I think, and this is what Heather thinks too, is we will see foreclosures come back on the market. There's so few in my market for sure, and in Heather's market and all that stuff right now. And it's because the markets have been so hot. But the reality is now we're going to hit a time where people have not been paying, plain and simple, and regardless of the path that got them there. Eventually the banks will also want their money. So they will now start to do a lot of pre-foreclosures, foreclosures, etc. And so now we run back into that opportunity, and it's smart to understand how to work a foreclosure. Whether you're the investor, the agent, the investor working with the agent, whatever the case is. But that's really what we think what we're going to start seeing. Now, will we see these en masse or something like that right away? I don't think so. I think we'll see them trickle in. What do you think, Heather?
Yeah, and I think it's also going to be market specific, right? Because in our market, it's just bananas. There was an agent in my office who was competing with I don't know how many people. And it's funny when Karen said 300, 400,000, every market's totally different, right? 3 or 400,000 in one market might be luxury, 3 or 400,000 in another might be low end, bread and butter, what have you. So an agent in my office was competing with I don't know how many other offers on a $450,000 home, and the winning offer paid $110,000 over asking price and waived their appraisal. So they were willing to come out of pocket $110,000 on a $450,000 property. Now, I don't know what it's going to appraise for, but when the next person comes around to buy a house in that neighborhood, that now becomes a comp. So it's a little different than the mortgage kind of increasing on the back end, like in 2008, 2009. But there's other markets that's not happening. Like that's not the case in South Florida. You know, I just sold a client's house, and we were originally going to come in at 585 because they had a pool, and there was literally a copycat house down the street without a pool that closed for 550. I said, okay, well, I know appraisals are given 20 to 30 grand adjustment. I'm comfortable at 585. Long story short, some different things happened along the way. It's closing Monday for 630 and it appraised. Now I provided the appraiser information and justified, even though they waived their appraisal and it didn't necessarily matter. I wanted my buyers to be in a good spot, right? You want everybody to feel good, but just the fact that an appraiser literally appraised this house, and it had a few other upgrades. It's a nice home. It's a beautiful home, but it's a bread and butter, not bread and butter quality, but like cookie cutter neighborhood, let's say. And it just closed it's closing for $80,000 more than one did last month. That's essentially, plus or minus a little bit of difference, the same home. And so when appraisals and closings are still going up, those markets, you're probably not going to see the foreclosures, but what you are going to see is people that have had rentals that have said, you know what, we're done. Like, we don't have to let you live here rent free anymore. So now you're out. And I've heard there's also some loopholes, like if your lease has gone out in that period, like it's not I'm not paying, hey, we're not renewing your lease. So now we are going to see, and this I believe in every market, renters that are being evicted and or leases not renewed, and it becomes an opportunity. And then it also becomes a challenge, right? Like, were they playing the system? Can they really not afford it? Then you're going to see a lot of people saying, well, everybody deserves a great home to live in and we should have compassion. And while I appreciate and I agree with that, we still, somebody has to foot the bill for this. We can't give a free ride. Right.
Just backtracking to the people that you were saying, the 635 house, and it was listed at 550 and all that. So we see that too. And what's interesting about that is, what if it's a neighborhood where there aren't a lot of sales, and and so you don't see anything sell for the next couple years in that particular area. And then these people want to sell again. So these people who bought it at 635 want to sell with then the opposite things happen. So the last comp in that area was, 475 or 5.25 or something. Well, they paid 635, and that's what they want to, they want to sell now for 685 because they want to pay their real estate commissions and their
closing costs.
Everybody wants to think they've made a profit and all that stuff. So now we're in this really, and I think we're going to see this in kind of smaller little nooks, is that now we're in a really interesting situation where people are again underwater because they've overpaid, they've overbid so high. So that'll be kind of an interesting, other thing that we need to watch.
Well, that, and then there's the affordability index, right? Like, people are getting priced out. I have these lovely clients. They're actually renting from another set of my clients that they just needed short-term. I guess they're not clients now. They had put in a contract on a house and all kinds of stuff happened. I won't go through their poor story, but I said, don't worry, we can find you another home. And she texted me the other day. She says, I'm just afraid we're going to have to make this one work because I feel like we've been priced out of the market in just the last few months. Wow. And the truth is, the home they got under contract for 630 now would probably sell for 700 all day long, 8 days a week. And so now all of a sudden, when does that price start? Right. Are we all going to be San Francisco, where no average normal person can afford to buy a house? They can't sell their house and move because there's just so many factors. And so, we're not saying any one thing is or isn't going to happen. And again, it's all specific, but I think if you're wanting to invest, the best thing to do is kind of look out a couple of years and say, what's logically going to happen? Like, we can look at charts, we can do all this other stuff, but let's just sit down and say, this is these are all the factors, right? These are all the ingredients. Now, what can I make with these ingredients? Like, certain ingredients you can make a pie with, certain ingredients you can make chicken Parmesan with. So we've got all these ingredients. What are we going to, what are some possible outcomes of this? And then plan your investment strategy 2 to 5 years out based on what we can see coming down the pipeline.
Right. Yeah, I think so too. I think, that it's kind of a fun conversation today without a specific conclusion, but really what Heather's saying is like, we all make money by forecasting, basically. And there's no crystal ball, and we have to watch. We're not gazillionaires, so we still watch along the way, and we're careful, and we make calculated decisions. But one of the things that I think is really that you can almost bank on is that something is going to change, and it's going to change here over the next 12 to 36 months.
Well, I mean, think about it. If interest rates bump up a half a point, how much does that change somebody's buying power?
A lot.
Little things. It's, what's the like the butterfly effect, right? One little thing has a huge ripple effect. So, and we're not going to stay in this cycle forever. If we learned anything in 2008, 2009, it's that things are constantly changing. So you just have to be prepared in advance.
Yeah, I think so too. But I do think, ultimately, I think that we will see some foreclosures. I think there'll be some will be the result of being underwater. I think some will be the result of, landlords being sick and tired of, everything falls on their shoulders everywhere. And
funny you say that, because 2 doors next to me, it's always been rented since we moved in here. And she happens to be an agent as well. And I reached out to her because I had a client contact me that said, we really want to be in Steiner Ranch. We'd love to be in UT. Do you know like a rent to own or anything? And so I reached out to her, and she just said, nope, I'm not renting again unless the sky falls. She says, I've had 2 miserable experiences and I'm done. I just want to get out.
Yeah. So sometimes it's not about people not having to, pay their rent because of COVID. Sometimes it's just, Pete and I too, everybody has. We've all had tenants that leave that have done $30,000 damage, $40,000 damage, on a tiny little bread and butter house. I mean, it's substantial. It's, 25% of the value of the home.
Right.
And so people have had that experience. People have had good ones too, guys. So don't think I'm just, saying, oh, all negative. But the point is we will see houses come on the market as foreclosures. We will see them come on the market as fix and flips because maybe the landlord was able to keep up with the payment, but they're just sick and tired of the house being trashed, or sick and tired of people not paying, or sick and tired of, the system, or whatever the case is. And I think we are going to see things like that. And the fact that people have overpaid on homes, or, the markets, like you said, that just the prices are just, we can't even touch them anymore. There's going to be a lot that happens now. Do I think we still have a very strong economy for a couple of years? I do. I think interest rates will still stay fairly low, but it doesn't change the fact that the smart person, the person who's going to make money, is the person who's going to start to watch now for what's to come.
And it's not to say you can't still make money now. I think, we're trying to keep these chats, if you will, close to a half hour. We could go probably another 2 hours if we wanted to on it, but maybe next week we can kind of, because I do think there is a now opportunity, not necessarily for the foreclosures. And the truth is, we don't know what's going to happen at the end of this month, because, and this is where I say politics absolutely play a role, because the moratoriums are done at the end of December, as if I recall.
Right.
So January 1.
And we can't keep.
Right. It's not sustainable anyway. You're right. So let's just assume that they're going to be done, because somebody is footing the bill. The banks, even if you say, well, the bank should forgive it, where do you think that comes from? That comes from all of us. Like the banks, the money doesn't just vanish and we say, okay, we're good. Like there's asset. I mean, it's not okay.
Right.
So let's just say that December 31st, this all goes away. We may not see foreclosures for a bit because, appreciation, because, people aren't in many markets buying at 100% anymore. They still can. But why don't we talk next week? Because I do think there is an investor opportunity for rentals. And how, you okay?
Yes, I'm trying to, he just walked in and I'm trying to be like 5 more minutes.
But I do think there's an opportunity to find these tired landlords. And so maybe next week we can just sort of talk about, hey, here's a roadmap to finding these tired landlords that may be fed up with the last 6 to 9 months of stuff.
Yeah. Yeah, I like that idea a lot because, and I think it helps the landlords, quite frankly, because a lot of times they're like, you know what, this is a great and easy way out, and I've made money and I feel good, and I'm down the road. And I think that's a great idea because I think it's a win-win topic.
Okay, awesome. Well, cool. I hope you guys got some value out of it, and at least we're entertained by our back and forth, and keeping positive on our end and not getting too snarky, which I have a habit of doing from time to time. But again, as Karen says, if you have any questions, no. If you guys have any questions about anything we talk about, or if you have like a deal that you want to send our way to take a look at and help you analyze to see if it makes sense for you, or if you're in one of our markets and want some help in our markets to start investing, please reach out. You can reach out to us individually on Messenger, on our Facebook pages, our emails, what have you. So we look forward to helping you. Again, I'm Heather Tankersley here in the greater Austin area, and then also can help you in South Florida. And
Karen Schaefer in Southern Colorado. Thanks, you guys.
Have a great week, everybody. Bye-bye.